Hi, folks. This is Lee with the Market Sense for the week of June 30th, 2020. The charts in this presentation are provided by Gettess and come from their Trade Navigator software. And this is a weekly bond market chart here, and basically we're back right in this sideways pattern that we've been looking at for most of the year. We had this nice little breakdown about a month ago, and it was substantial. It just couldn't last more than a week, and it turned right back up. And if anything, they seem to be shrinking now. Uh, I think you got to look at roughly the 180 area as potential resistance, and I think support probably around 177 in here. I mean, we could look down to 172, but I think it's 177 to 180. This is not technical analysis. This is just the real world. This is where we are. You've got the COVID stuff coming in that's going to prevent the economy from really ripping and roaring until we can get that cleaned out. And so that would essentially prevent interest rates from going up and therefore bonds dropping much. But at the same time, while they want to prime the economy and try to help, they don't have a lot of room to lower rates. So there's not a lot of room for the market to go up. So staying sideways here makes the most sense, and having the range shrink makes a lot of sense. There is an employment report at the end of this week that could jolt them one way or the other, but honestly, I kind of doubt it will. It was a big surprise last month, and I don't think anything will surprise them that much this month. So, we're basically stuck with doing nothing but nibbling edges, which I believe are about 177 and 180. And, look for quick profits. That's about all we have there, I'm afraid. Now, in stocks, this is really kind of interesting to me. They seem to be starting up a little sideways pattern here. And the reason that's so interesting, bear with me, I'm telling you old man tales here. If I squint, do sort of back of a cocktail mattress analysis, this looks like October 1987. It looks a little bit like a monthly pattern we saw in October of 87. And what happened then is we had this big dump and we had a bit nice, rather rapid recovery. But then they kind of just went sideways and wouldn't take out this high. They kept going sideways below it. Actually, it took them 3.5 years to take that out. I don't expect that to be the case here, but a little sideways here kind of makes some sense, I think. And again, we've got to work through the COVID stuff before we know what's up. I was kind of looking at support down here in the 2960 area as being an interesting buy potentially this week, but they did not get down there. They opened above that and just sort of started up. The 3055 area could be a real negative if it were to hold and knock them back down, but that doesn't seem to be the case. They seem to be working back up. It's very possible 3175 is the target up here. It's possible they're going that high. I do notice that on Tuesday they traded 3100, which is about where the projected high is. Now, I wouldn't have expected that to be really important going into the week, but it won't surprise me a lot if that's it. They hold there and maybe go back down and test support. Maybe not. Maybe just sit there. I must say, though, we have sort of a dangerous situation. You have the monthly employment report due out at the end of the week, and the end of the week is Thursday this week, not Friday. We're closed Friday for a 3-day weekend. So, boy, that unemployment hits and things get rocking and rolling, and then everybody starts going home for the weekend about 2 hours later. Could make for a very, very skittish trading day on Thursday. So I'm probably not going to be around. I'll trade them early if there's something to do, but not late. It's just sort of a dangerous situation to be in. So just thought I'd mention that to you. But can they get up to 3175? Yeah, and I might be willing to sell them if they get up there. I still think the 2960 area is support, but I'm a little less interested in buying them than if they had been down there like Monday. That would have been a lot better. I really believe sideways is the most likely unless something shocking in the employment report Thursday. And after being shocked so badly last month, I'm thinking that's less likely this month. That may be a dangerously complacent thought, but that's what I'm looking at. So I don't know what else to tell you about this week other than